Hey everyone, David Shahada here, Real Estate Investment Finance. Today we're going through the 7 strategies of staying ahead of inflation. Guys, strategy number 1 is to have your home loan reviewed. A lot of the time we're seeing interest rates going up and lenders also passing those rate rises up. But what a lot of people don't do is review their lending to make sure they're on the best interest rate that's out there. So guys, while we are seeing interest rates go up, it doesn't necessarily mean that you're on the best deal from your lender. There could be better deals out there. We're able to save clients in some instances between that 1 and 2% off their mortgage, and therefore able to slash tens of thousands of dollars a year and have that money in their pocket, which is great right now while we are seeing things go up, where you can have that money in your pocket, not the bank's. Our strategy number 2 is to review your lending commitments. Guys, it's easy to have a couple credit cards, having some balances owing on them, get that car loan, you might have a personal loan, and what you're able to do is review your lending to be able to see if there's a better deal out there for you. You're able to actually consolidate that lending onto your home loan if your equity is available and you qualify for that. And instead of paying around about your 15-20% in some cases between your credit cards, your personal loans, your car loans, we may be able to look at getting that on a lower home loan rate, which may be more around that 4% instead of 20%. That in itself can slash and save thousands of dollars a month in commitments and get that interest bill a lot lower, and therefore have that money in your pocket rather than the bank's. A great thing to review right now where we are seeing inflation and things go up. It doesn't necessarily mean your commitments need to stay high. There could be better ways there to have that money in your pocket and save on those commitments. Guys, our strategy number 3 is to invest in real estate. While we're seeing inflation go and things go up, what we're also seeing is real estate booming as well. And guys, as things go up, rents go up, so as an investor, you're able to receive a higher return on your investment as well. But what we're mostly seeing when you buy the right property in the right location and have that team of experts assist you do that, you're able to see a good return and growth within your property investment as well. So guys, while things are going up, if you get a 10% increase there on your home and you bought a 500 grand home, that's a $50,000 gain that you're also making. So while we're going through a high interest rate, real estate always also performs well when you look at the data and statistics over the long term. Guys, our tip number 4 on that is to review your wants. It's very, very easy to get that confused sometimes with your needs. So there's a certain amount of things that you need for your day-to-day living and expenses, and then there's the extras out there for the wants. And guys, while we are seeing inflation surging, if you are feeling the pinch on that, it's a good opportunity to review your needs versus your wants and to outline that, which takes us to strategy and tip number 5 to stay ahead of inflation, and that is reviewing your budget. So it's super important now to be reviewing all of the outgoings that you've got coming out of your household, all of your commitments, segment the needs and the wants, and be able to see how that is tracking for you to make sure you are tracking your numbers and your budget. Guys, our strategy number 6 is to make sure you're maximizing your tax refunds. It's so important that you've got a great accountant that understands your situation and can really help you make sure you're getting that tax money back that's legally yours to get back. As a property investor, especially if you do own property, a good tip here is to make sure that you've seeked out a surveyor. If there is any depreciation costs, we do see that as a common mistake that a lot of investors make where they're not claiming those depreciation credits, which could equate to thousands of dollars of tax refunds back in your pocket at the end of the year. So coming to assessing your numbers and tax time, make sure that tax money is coming back for you and you are utilizing it in the best way. And ideas like that could be sitting it in an offset account to make sure it's saving you money on your home loan and therefore slashing thousands of dollars again off the interest off your mortgage. Now, last strategy, number 7, is to diversify your income. They say the average millionaire has 7 income streams. It's super important that you start considering ways to be able to generate more income streams. If you just have a job 9 to 5 and you're relying on that, you're one step away from having no income, and it's super important that you're looking at ways to protect yourself and your household income by having multiple income streams. And there's multiple ways you can do that, from side hustles to investing in different classes of assets such as shares with dividend income. But our favorite here, and we're helping a lot of people, is real estate investment as well, and being able to build those income streams that come in without having to get out of bed every night. And that's what true passive income is. Thanks guys, and we'll see everyone soon.